I hope we're all doing alright and we had a good day trading. Let's get straight on into the debrief. Today I'm going to be bringing you a reversal momentum strategy in the Bund. It's a sort of mostly a fade trade, but with sort of very specific price action that you can identify, and it's kind of clear cut in terms of and how you set up for it, and it's very an obvious sort of trade. So let's just get straight on into the chart. Excuse me. So this is the Bund 1 minute. The price action that is sort of going to signal you the potential trade is this candle in here. So as you see here on the left hand side, I have the I've written stop/blowout candle in this big red candle here. This area here is a sort of a swing area, support area, which I liked in terms of, not that I like, but it was just a key area in terms of how you want to see price action trade, guys. So you hear me talk about structure depicts price actions. This is the structure in terms of, so this is where you then need to work out the price action in here. So what is it telling you? The structure in here and how it trades. This is what I had just noted here on the right. You see key price ladder accumulation goes on in here, and this is where you've seen the stops, and then this is the two-way trade. You see above the area, the structure that you've just seen, and how we auction in here, and how you can how you can trade out, how you can get on this long move here. And then this just down here, notice similar to, in relation to the stops candle, is this spike in volume. So I've sort of written here spiking volume as market rebalances. So you've seen the initial momentum move down. You've seen the sort of overexertion, the overcommitment, and then you see this big spike in volume as the market sort of rebalances and readjusts itself as to how it should be positioned, and people covering, people initiating new positions, and then this is where we start to work out how we're auctioning, how we're going to move away from this area. So let's get on into the ladder. Like I said, guys, it's a reversal momentum type play. It's a momentum reversal in this sense, and it's an exhaustion play again. You're sort of looking for where the sellers begin to start tiring out and when buyers step in and take control. And then for the market environment, it's predominantly high velocity, but I suppose you go from high to low velocity in terms of you have this two-way auctioning, and then it kind of dies out, and then it goes for low velocity, and then it sort of just accumulates, and then moves away, sort of thing. You have a 2 to 3 tick risk management, and your reward can be, say, 5 to 10 ticks. I mean, you're not looking for a complete entire, change in trend or dynamic of the market, but you're looking to sort of, you're looking to catch people when, like you say, the nature of that mood, it's overdone, and you're looking to catch people who are still committed to that blowout move. So anyway, guys, let's get straight into the ladder and get myself playing for you. Sorry. Why is it not? Okay. So like I said, guys, the prices that the support area on the 1 minute chart was this area here, 24s to 22s. And this is just, I'm going to show you guys, I mean, this is how not to trade it in terms of, so I've been short, I've overcommitted myself in here, and then I cut and reversed, and then I got all worked up, I got kind of panicked with myself. And then this is just, so I know the potential move that's coming, right, but I'm pre-positioned early, I'm pre-positioned myself. I've tried to, not for wrong reasons, but just, there's nothing wrong with, identifying a good trade in the right area, but just, you can have the right trade and the right idea, but just not have the right timing. So let's just see, notice how we start the trade in here, slowly auctioning, slowly accumulating. And once we then take out the stops, how we auction through, and then how I should have reacted in regards to it. But, as you see here, I'm only looking for a few ticks. I'm not looking for a huge move, just sort of scalp sort of thing, work my way out. So as you see now, I'm trying to scale out this position as I've seen the market go off it. I'm getting out of some, and then as you'll see here, so we blip down, and then I panic and I cover, right, knowing that the 26 to 24s was the area that I was interested in buying. So just notice now straight away how we're trading. So we're seeing 400 dots clipped into 24s and then lift 25 straight away. Notice how we then just the auctioning quiets down. The size going through has just died off now. The largest size you just seen trade was into 24s and then lift 25s. Literally clipped back into the 25s, the same size that was clipped down. So just, as a key reference point to bear in mind, you've seen that size into 24s, okay? You've seen someone sit there and happily take that amount of size in this area here. So like I said, you're looking in here and then you're seeing this firm reload come back in, guys. So you're seeing the firm reload between 24s to 23s, and you're just sort of working and bearing in mind that the 26s was that sort of area that we liked. The 26s to 24s was that swing area. So just see how we start to now move away and trade from there. And this is something that I really wish I'd execute better in terms of on the long side. But just looking back at it, it was such a nice price action done here, guys, and and just the nature of how the market's trading at the moment, you're getting these. It's something that I've it's taken me a while to get used to, but it's the market as a whole, the Bund as a whole is very much it's in such a balancing and sort of two-way trade not two-way trade, sorry, that's the wrong word. It's like a two-way position market. So you'll get an initial move in the morning, whether it be to the upside or the downside of you've had a cumulative positioning and in areas here and here, you've had new lows taken out or whatever. You've had people accumulate position, an overall net position, and then there's a sort of, it's like intraday. You're looking for intraday sort of reversals in how it is and how in the positioning. So like, at what point of these lows in here does then the price action die out? You know what I mean? And sort of when does that sort of lower high put in and that sideways get put in and then sort of move away? And you test back into these areas. Just sort of as a basic understanding, then you're looking for potential further upside, and that's what the Bund's doing at the moment, guys. It's very much, it's not following through and sort of thing like that. So when you just see, it's just like I said, I've been saying all week, it's just seeing these red flags, right? So now the fact that we've got above these 26s, 24s, and we're auctioning above, just still look how quiet it is in terms of. We've just seen the stops come out. We've just seen the aggressive selling dry up. Everyone who's short now or still short anywhere down here is going to start to feel a bit squeezed. And we're just going to, apologies while I am on Skype. But like I said, you're looking for, as we sort of have that two-way trade above this area, you know what I mean? And you've seen the absorption down here. You've seen all this volume distributed in this area here, and just completely rejected it and held the bid back above it, sort of thing, like you see here, these 27s. Any sort of accumulation around here, around 28s, 29s, and then you want to see where that passive seller, that passive buyer then turns into an aggressive buyer. I was talking to Craig about this today, Craig and Brendan. Just sort of explains to them, in any move, whether it be a real aggressive trend move or sort of like this kind of reversal move, you're looking for where the buyer in this case. So you have a buyer who's stepped in at a certain price passively. He stepped in and said, right, I like buying 24s. He says, I like buying 24s. I like buying 27s to 28s. But at what point does he then say, right, I want to buy more at higher prices. I need to get filled at higher prices. So that's where you get you need to have someone willing to facilitate the sort of trade, in terms of he's willing to, put in that low, put in that high, and then he's going to move away, and then he's going to make at what point does the move become aggressive? And this is how I sort of, why I always talk about the pivots and the ladder sort of thing. When you have these, you're looking for the progressive in price action. You're looking for, right, so we've had that absorption at X price here, and then you want to say, and then you see sort of two-way trade. So you're seeing trade back into his price, and then as when you see lifting, you want to see trade back down again, and then that price getting higher, and that's where the kind of move comes in, guys. You have that sort of, it's a very sort of methodical way of looking at it, and it's very I don't know, I don't want to say strict, but it's just, for the way I look at it in terms of two-way auctioning, is you have to just constantly be sort of in it, guys, and like you're just seeing, so you're seeing the smaller clips, and just notice the reload. Any clips, any times you go offered, we're seeing buy. There's initiative buying down here. The passive seller is still here. This guy is coming and moved prices higher, and we're seeing initiative at the higher prices. Anyone who was, the fact that we've moved away from these prices shows initiative. This is that two-way. This is that kind of that 1 minute accumulation on the price chart, guys. So it's at what point do we break this kind of sideways pattern and have initiative to the upside? And as you'll see shortly, it's quite a quick move in terms of predominantly shorts being squeezed, I imagine. As you'll see, like that, as like I was talking, you have this net positioning in the market, and then once it kind of reverses, what is the pinch point where you can kind of really add through and be aggressive with? So like you said, we're still seeing this two-way trade above 26 is above 24, and you're just kind of waiting. So right, in this area that we've started accumulating between 29s, 27s, 26s, at what point can I execute and get and be efficient in terms of my risk reward, in terms of my stop and how I'm going to execute. So just you're still seeing initiative buying here. You're still seeing clips into the offer, and notice anything that gets clipped down is instantly reloaded, sort of thing. So in the way that I'm looking at this now is sort of I want to see prices now trade. I want to see prices trade above 29s. So I want to see people lifting 30s. So in an ideal world, we see 30s go bid. We see 30s go bid, and then we see clips down into 29 to test. You're testing that passive buyer. So you want to see the passive buyer step in at 29s. You want to see someone say, "Yep, 29s is now fair value." So like we see here. Just notice here how. So you see 29s have gone bid. We're seeing clips up into 30s. 200 lots trades into 30s. Now you want to see clips down into 29s and then lift. So you're seeing small size, and notice the initiative buying still, guys. Another 100 lots trade into 30s. I should have really paid up here in terms of, you see another 300 lots now trade into 30s. I really should have paid up there, just in terms of, like I was just saying to you guys, you've had this two-way accumulation in here. It's just, at what point does this move now become more aggressive? So you've seen 30 step in and reload and buy aggressively, and now you want to see trading into 30s and lifting the ones, sort of thing. So like you're seeing that progressive pivot up the ladder, right? So you've just seen that there. You've seen 100 lots trade into 30s. Notice the reload, 200 lots trade into 30s. We're still accumulating at these higher prices. See, this is what I mean, guys. The passive buyer is stepping up at higher prices here. Clips into 31s, you want to be sort of aggressive. I mean, this is another place you could get in terms of, so you've seen 29s absorb, you have your stop below 28s, around 27s, you maybe start scaling out, and you'll start to see, as I have my Skype up again, sorry guys, as you'll start to see, you'll see that kind of, that's what I mean, guys. So you've seen the passive buying, and then it steps up, so the initiative to passive, and then that's how you get the, especially with these types of short squeeze moves or any sort of positional squeeze moves, how they usually pan out, because it's more of a liquidation of a position. Like I was saying, with these intraday positions we're having at the moment, it's intraday washout. So you're seeing each side of value getting tested and sort of reverting back into fair value. So let's just continue, and as you'll see, so now just notice how heavy, so any clips down into the bid is just preloaded. And this is what I mean, guys. You want to see this in terms of as long as that passive buyer is now sitting at higher prices saying, yeah, 31s is fair price, yes, 30s is fair price, 29s is fair price, and then you just get the lift, sort of thing. Then any sort of initiative moves up is all you want to see in terms of this type of play. You're seeing size clipping into 34s, you're seeing genuine paper 300 lots trading into 35s now, lifting higher prices, wanting to be aggressive at market. This is how I view it in terms of you've seen potential failure through the stops in this region here, in between 26s and 24s. You've seen this sideways accumulation, so the passive buyer stepping in from around 24s then sort of accumulating between 28s, 27s to 29, sorry, and then when he starts to lift between 30s, clipping up to 31s, and then holding that bid sort of thing. Sorry as I draw terrible lines. As you hold that bid up the higher plate of the ladder, it's, constantly stepping up in terms of there's no obviously there was occasionally washbacks and reloading, but it's always firm. There's always someone then stepping up and reloading the bid, reloading and paying higher prices. That's the kind of the concept of this trade for me, guys. But yeah, as you see it's a very, you have such a tight stop on it. This trade goes on to squeeze up to like, I think 41s, 42s, so it depends on how you want to play it in terms of whether you scale out and let something run or sort of thing. It's down to you guys, but in terms of the risk reward, you can have such tight risk, and you can also get quite a lot of size away on this. You know what I mean? If you want to be really aggressive, you know how it's gonna, you know how you wanted to see it trade in this sense. You've got an idea of, the beauty of this trade is you'll kind of stop trails with the price action. As you see, you kind of go up the ladder, and you're seeing the bigger clips now trading to 35s, and you're seeing clips down to 34s, as you see here, like you just did there, 207 lot trading to 34s. And notice the reload. He reloads 600 lots and the clip up. Only 142 lots took 35's bid. So that's the thing. You're getting that positional washout now. Any shorts, they're weak shorts in the market now, paying up. But yeah, guys, I mean that's all I really had for you today in terms of the price action in the ladder, and just what I sort of, it's something I didn't even trade today, but I just really liked the price action, and it was something that I could have executed better, but I just found it really interesting today in terms of identifying, having that kind of, because we haven't had that sort of stop blowout and then reverse in that sense, and it was just so clean in terms of price action. So I just really like that setup for you guys, even though I didn't trade it. But yeah, guys. Where is my? Sorry, yeah. So just some final thoughts. I feel this is quite a common thing. Something I read this morning is that intuition is nothing more than recognition. I thought that was a really great thing this morning. I read it. It's so true in terms of, whenever you feel like you're just flowing or you're understanding everything in front of you, and it just seems so seamless, and you think, oh, it's because I've naturally got it, or it's because the bun's good at the moment, or something, something like that. You're trying to justify it. Well, in reality, it's not. It's just you've just seen it. It's recognition of patterns. It's recognition of price action. It's a recognition of how it should trade out, right? So you recognize, the passive buyer and where he turns aggressive. So you've recognized that, and it's just you've recognized how it should trade and how it should pan out. And that's all it is, intuition, guys. Whenever you feel like you're just clicking and things are going well, that's all it is. It's just the fact you're just recognizing and accumulating, and it's accumulating all these patterns and setups in your mind. But yeah, I just thought I'd like to leave today on that. I thought it was a really cool quote that I read this morning.